Welcome back. Monday morning, take a look at gold sitting at 1711.30, looking fairly steady. But where to from here? Let's talk to Jay Taylor. He is president, also CEO, Taylor Hard Money Advisors, joining us live from our studios down in Hong Kong. Jay, good to see you again. The troubles across in Europe, just at the EU summit Friday, doesn't seem to be doing much to repress gold, does it?
No, I don't think so, and I don't think you can expect it to, really, because the kind of things that would really suppress gold, that would really cause gold to go down, are not being done. What needs to be done, obviously, is the politicians and the people as a whole in the West especially need to bite the bullet. We need to consume less and save more money, and of course in the short run that really would contract the economy, and nobody wants to endure those short-term pains. And so essentially what we're trying to do is print our way out of trouble, which I think is going to get us into deeper and deeper trouble, but nonetheless, well, in the process, of course, then debase the currency, and I think increase the price of gold, or at least, let's put it this way, not necessarily the nominal price of gold, but the real price of gold, because underlying all this are tremendous deflationary pressures, and that's what the Fed and other central banks are trying to overcome. There's so much debt, it cannot be repaid, and if the natural forces of the market were allowed to work, we would have one heck of a deflationary depression. So counter to that, they're printing money, they're debasing the currency, and you know, prices may not rise that much. I'm not one that believes that just printing money and pumping it into the banking system automatically raises prices across the board. I'm not convinced of that. But one way or another, they are debasing the currency, and the value of gold in terms of its purchasing power is rising, and rising very dramatically. As a matter of fact, I think that the nominal price of gold sort of masks the real purchasing price, the real value of gold. And I like to measure gold relative to the Rogers Raw Materials Fund. Going back before Lehman Brothers, an ounce of gold would have purchased only 17% of that fund, which is a basket of all kinds of commodities. By March of 2009, it would have purchased 44%. It's now around 46, 47%. So gold's purchasing power is really rising very dramatically.
Jay, a great question from a viewer. Kunal asks, how do you see the gold-silver ratio behaving next year, especially if the S&P is to revisit 2008 lows?
Yeah, well, if that's the scenario, if we have a contracting scenario in which equity prices fall, commodity prices fall, then I expect gold to rise relative to silver. On the other hand, if we go in the opposite direction, if the risk on is the trade for 2012, then I expect silver to outperform gold. It almost always works out that way. Recently, with the problems in Europe, we've seen gold outperforming silver considerably. So, and that was true immediately after Lehman Brothers as well. And historically, that's true because silver still is much more of an industrial metal than a monetary metal, and gold, on the other hand, is so much a monetary metal. So when confidence is lost in the currency system, gold is usually the primary beneficiary.
Is there a major short squeeze ahead for gold, Jay?
Well, in a way, I think there is, because I think gold is the money of the markets and not the money. You know, we've been forced essentially under law, that's what fiat money is, to use paper money. And, you know, I think that, you know, when you'll know that this bull market in gold is over, I would say, watch what the Americans are doing, because I think the Americans are most clueless about gold. I think when CNBC in New York, Joe Kernan and the rest of those gang, are really championing gold, I think you might think it's about over. But honestly, Americans have so much confidence in policymakers, in spite of the fact they've gained very little traction since Lehman Brothers and before. I remember 1980 when the gold bull market was over then, and people were lined up in the streets of New York to buy Krugerrands. When we see that, you know, Asians are much more savvy. They'll be buying gold. Indians, other people around the world who don't necessarily trust policymakers as Americans do. But no, I think there's lots of people that haven't even begun to think about buying gold yet. Certainly where I come from in New York, that's true.
Okay. All right. Listen, Jay, always good to talk to you, sir. Thank you for your time. Do it again soon. Jay Taylor, Taylor Hard Money Advisors, live from our studios down in Hong Kong.